Hi, you're listening to Elevate Search from PyData Metrics with me, Emily Hogarth,
And me, Louise Linehan.
where we explore the expansive benefits of search intelligence.
This month, we are looking at how fintech and disruptive banks are changing our banking habits online, focusing on the success of disruptive banks in search, the decline of traditional banks online, and what traditional banks can do online to stay abreast of these changes.
So, what are challenger banks?
Challenger banks are smaller, fairly young retail banks that are competing with the longer established traditional banks, specialising in digital banking and introducing new financial management features.
So, banks like Revolut and Monzo.
Yeah, that kind of thing. They're pretty successful at the moment, and there's a couple of reasons as to why that might be.
Yeah, so everything they're doing is reflecting the modern world and therefore attracting a younger generation. So not only are they adding features that are opening up banking and finance in a new way, but they're also demystifying the whole process and their whole business. Many are fully digital and app-based. They're even investing in things their users care about. So much like we might use our clothing to communicate who we are, these banks are actually feeding into the younger generation's identity.
Yeah, and I think that's largely because of things like the 2008 financial crisis. We all lost a lot of faith in banks. There was a bit of a lack of clarity. And these new banks are really focused on transparency, like you said, embracing also new technologies. And they're also so much more socially and ethically responsible than their predecessors. And they actually need to be as well, because if they're going to hope to meet the demand of these new generations, these younger generations, that's what they care about. So it's quite important.
Yeah, and it's definitely paying off because Monzo now accounts for 15% of all new current accounts opening in the UK, which is pretty impressive, really. So looking at search, what does this success of challenger banks look like in search?
Well, looking at search volume, the biggest growing disruptor banks in search are all digital only, so that's pretty interesting. Revolut, Monzo and Starling Bank are the three leading challenger banks in search volume, but Yolt has seen the most search growth with a staggering 4,715% increase, and that's between 2016 and 2018. But they actually only launched in the UK in 2017, so they grew wildly in an even shorter time. And since that launch, they've gained 500,000 customers, so also pretty impressive. Between the same times, 2016 to 2018, Revolut grew 145%, and Monzo has also grown 1,136%. And Starling Bank has also grown 1,360%. So they've all shot up in the last 2 years.
This growth will also mean that they need more control and a better understanding of their market and their customers. So as more and more disruptor banks, such as Yolt, are coming to prominence, the market is saturating, so you'll need to know where you are and where your competitors are. Also, when reaching new customers, processes are going to change as they grow, because in the past, their marketing has been just as innovative as the banks themselves. So, for example, Monzo grew their customer base largely through word of mouth. They had a waiting list and then a golden ticket scheme that helped you skip this waiting list and get a bank account. So this gave Monzo a real exclusivity and, an edge. They weren't really interested in a big marketing campaign, and they didn't need to be because they had such a small customer base. But now that they have a large customer base, they don't have the waiting list anymore. They don't need the golden tickets because there's no waiting list. So they're now looking for more traditional campaigns to reach an even greater audience, and they need those bigger campaigns. So this will inevitably require market and customer data to execute and track such campaigns.
Yeah, and banks such as these can also be using search data in a broader sense. Many of them are private, so they're not actually on the stock exchange yet, so they can't as easily see as traditional banks what their value is. So using search volume data as an indicator, they can see where value lies and interest lies, because search often signifies commercial intent. So for example, if someone were to search Yolt, it could be assumed that one day they'd wish to bank with Yolt. So, yeah, disruptors can use search intelligence, much like they would use stock market data, to see their value in the public domain.
Yeah, like for example, if a disruptor bank was declining in search, it can be assumed that their brand value is also declining.
Exactly.
So are these banks as disruptive as we're led to believe?
Well, if we look at traditional banks in search, it's undeniable they are still huge. In March alone of this year, there was 16 million searches for all of the leading traditional banks. And in the same month, for all of the leading disruptive banks, there was only 2 million, so a really large gap. But we can also see there's definitely decline in traditional banks in recent years. In fact, traditional banks have fallen in search volume by 22% from January 2016 to January 2019.
It's important to note that challenger banks aren't actually offering the same as traditional banks. So traditional banks are offering current accounts, credit cards, insurance, mortgages, and most challenger banks are really only offering current accounts and maybe credit cards. But because of this difference in offering, many users of challenger banks are also still using traditional banks for the features that challenger banks aren't offering, so they can get the best of both worlds. So they're not actually dropping traditional banks. So
yeah, there's definitely still opportunity there for traditional banks because disruptive banks are still in the initial stages of targeting their new customers, new audiences. So there's still opportunity for traditional banks to capitalize on this.
yeah, but despite that, there's still a fear from traditional banks. So a recent survey by fintech provider Freedom found that 86% of bankers believed challenger banks were a growing threat to their business.
So what can traditional banks do to remain competitive alongside these fast-moving disruptors?
There are definitely things a traditional bank can do to stay relevant and compete. It can be hard to change and transform digitally when you've got such a long-standing infrastructure and processes. It's really important to have a carefully planned strategy in place.
Yeah, so recently there's one example where a bank didn't actually do this so well. So Halifax completely copied Monzo's banking app layout recently to such an extent that they didn't even change the number or name on the virtual card, something that Monzo spotted and then called them out for online on social media. And the name on the card was actually the name of a Monzo employee. So it just goes to show that disruptive banks are threatening traditional banks and they're kind of scrabbling to keep up with them. So, yeah, it really isn't enough to just copy challenger banks. There are smarter ways to transform to fit in with this rising fintech. And one of the most important things is having data to understand what is important to your audience and really getting to grips with your customer. So by integrating search intelligence and other customer-focused data sets, you can identify where people's financial interests lie and build a profile of your customers to inform things like marketing, R&D. And once you've identified those interests, you can optimize your site and attract those new customers.
Yeah, and search is especially important for new business because as digital banking is taking place on apps mostly, the people searching online are most likely researching. So being able to capture those researchers at this time is imperative for them, maybe later signing up for you. So having your site optimized for the relevant terms is really essential.
So from a search intelligence perspective, if you had one golden tip for traditional banks looking to stay competitive in the face of disruptors, what would it be?
Well, you can actually potentially use search data to find an appropriate partner to propel you into the digital banking arena. So as an example, Goldman Sachs partnering with Apple to create Apple Card. Apple is such a huge name in tech. It was very shrewd of Goldman Sachs to partner with them because the younger generation, millennials, Gen Z, they are completely bought into Apple tech. So they are only really thinking about Apple and not thinking about the traditional bank behind it. So as new banking is completely tied up in tech, we, I think, can anticipate seeing more of this sort of partnerships. So you could use a share of voice chart to see who's in that arena online and make an informed decision.
So I think my top tip would be start by monitoring the communities that digital disruptors have generated for feature suggestions and banking suggestions and offerings by customers. And then I would probably look to tracking these trends in social media and search to see which ones are gaining momentum. And then I would perhaps feed this back into my R&D and my marketing to get that competitive advantage. If you like what you heard today and want to see a deeper dive into how the UK banking search landscape is changing, download our banking report in the link below.
Please subscribe on iTunes and follow us on Twitter, Instagram, Facebook and LinkedIn @PyDataMetrics.
Thanks for listening and have a great week.